Well, if you take a look at the oil market over the past few weeks, what you've seen on the data points is rising oil supply, concerns that oil demand is going down. What we think is going to happen over the course of this quarter is you're going to see a big pullback in Iranian exports. And just remember, the fourth quarter of the year is the peak global demand quarter of the year. So you're going to have higher demand and then the Iranian oil coming off the market. And we think that's going to be a positive backdrop for oil prices.
I mean, that's been the reason that we've seen prices run up to these levels to begin with. So a lot of people think that that's already baked in.
Well, we haven't actually seen the oil come off the market. And I think that's the key, is everybody looks at all the data points. And until you actually see 1 million barrels per day less exports ring through to inventories, then I think that's going to get a lot of attention.
We have demand being the other half of that equation. What you're talking about is supply. And we did hear from China today that their economy slowed or grew more slowly than it has been to this point. How big of a concern is that? Slowing growth in China and actually some declining growth in other nations.
It's definitely a concern, but I think when you look at the demand side of the equation, the data takes much longer to really figure out. Just remember, oil goes into a lot of different things: transportation, petrochemicals, airplanes. So the aspects of oil demand can be pretty varied.
Wynn, let's talk a little bit about the China situation and what that means for currencies, too. Because hearing this today, there are now concerns that the Chinese currency will push to 7 yuan to the dollar or beyond that. That's been a real concern if we were to hit that psychological point. A, do you think that's a risk of happening? And B, what would happen in the fallout from that?
Well, I think there's been a lot of ink spilled about that 7 level, and there's nothing really magical about it. My view is that if emerging market currencies remain under pressure, the yuan will also sell off as well. And I don't think the Chinese are trying to engineer a weaker currency.
No, to me it seems like they're almost propping it up.
Yes, yes. They're very concerned about capital outflows. Look, China is a concern. I mean, I've been on the show many times. I've sort of poo-pooed, the sort of China disaster story. But it's a growing concern. I have to say, I'm getting to the point where this yellow light is blinking a little bit more. They're juggling a lot of balls. We know growth is slowing. We know all of a sudden deleveraging has gone out the window. So they're saying new loans are going to be used to prop up the economy, and that feeds into the whole financial stability issue. So, look, I'm not saying it's going to blow up, but I guess I would say I'm more concerned about China now than I have been in several years.
Can I reverse the conversation back to Saudi just for 1 second? Because I wanted to ask about where you think the leverage lies. Everybody has this view right now that Trump is somehow going to roll over and effectively come up with some kind of concocted story, and we're going to continue doing business. But I want to read you. This is Brett Stevenson in the paper this morning. He says, apologists say that we need Riyadh to share intelligence, oppose Iran, and pump oil. That's the argument about why this would happen. But he says the kingdom, no matter what, still is going to oppose Iran and pump oil regardless of the attitude we take towards Khashoggi's killing. And as for intelligence, if we don't want to if they don't want to share their intelligence with us, we don't need to share ours with them. He says, in the age of fracking, the House of Saudi has infinitely more need for the United States than the United States has for the House. What do you make of that idea? And if that's true, could we turn on them, and what do they do in retaliation? And does it matter? Is Brett Stevenson right?
Well, I would say he's right in the sense that with the fracking, we are much less dependent on Middle Eastern oil. And the Saudi threat earlier this week, we may see oil at $200 is to me not a significant threat. I mean, oil at 200, we have a global disaster, global recession, and it would be basically shooting themselves in the foot.
Where are you on that, Jack?
Saudi Arabia is such a big ally of the United States for a lot of different reasons, for regional defense, for terrorism. So if you take a look at breaking that relationship, what happens with Saudi Arabia? They become closer to Russia, and obviously that is not a great move.
But I think
for
the point that Brett's making is actually that they don't, that we actually have the leverage in terms of both being a sort of moral player in terms of instilling our values globally, and that they actually, even if you upset them or upset the apple cart, if you will, or the oil cart in this case, that actually maybe they actually come back to us.
Well, I think if you take a look at if Saudi Arabia pulls back oil production, what's going to happen? Oil price is going to rise. The United States is not at a point where it can be the excess supplier of oil. There's a lot of pipelines in the Permian Basin that need to be built before that supply can get to the market. So Saudi Arabia still holds a lot of power in the oil market.
Wynn, let me ask you really quickly. You think in terms of currencies, going back to this, that we're underestimating the market is underestimating just how far the Fed is going to go with interest rates. How do you think that plays out?
Well, we've had some comments from Powell. We had FOMC minutes earlier this week that talk about restrictive policy, which to me means going up to sort of 3.5%, 4%. Will we get there? I don't know. We talked about recession last time I was on. We don't know what's going on with the U.S. economy. But the way things stand, the Fed has a very clear intent to hike rates, I think, farther than what the market is expecting. The dollar's kind of gone back and forth. It tends to get traction when people start focusing on this sort of hawkish Fed. But this recent dollar softness, it's a little puzzling to me. I do think the Fed is ready to go in December. At least 3 hikes. I think markets may have to start talking about 4 hikes next year. And again, I don't think the market's positioned for that, and that's where things can get messy.